Hello everyone. The dollar rose against most currencies overnight, even as U.S. stocks continued to rally for the sixth day out of 7. A firm ADP employment report helped to raise expectations for Friday's payroll data and gave a good tone to the markets. Although European stock markets were also higher, peripheral bond spreads narrowed further, and even Greek economic sentiment improved, but euro-dollar couldn't make any progress. It looks really like the risk-on equals sell the dollar paradigm is over. That means traders will have to find another funding currency besides the dollar, which probably means a weaker yen and a weaker pound over time. Now, today will be a big day in Europe. The Bank of England and the ECB both hold policy board meetings. Neither is expected to change rates, so the focus will be on ECB President Draghi's comments after the ECB meeting. Given all the tensions over economic policy in Europe, we think he's likely to take a dovish stance to keep the euro from strengthening. That would help the economies of the peripheral countries. In that respect, the market will be focusing on whether there's any change in his views on inflation. For euro-dollar, we now see resistance in the 130.55 to 130.80 area and are in favor of bearish positions. Any dovish comments by Draghi could see euro-dollar move to the 128.80 to 129 the figure area. For the pound, the market's already begun factoring in the possibility of an increase in the target for quantitative easing purchases today, although only 1/4 of the economists surveyed expect any change. At the same time, with a majority on the board now thinking that the UK economy needs some new stimulus, what other tools do they have? Maybe a weaker pound? We remain bearish on cable. We have an intraday target of 149.20 with a subsequent one at 148.60 as we look toward the fulfillment of our longer-term target, 147 the figure. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.